Key financial ratios for investors. Key financial ratios for investors that help evaluate a company's financial health, performance, and valuation. Here are some of the most important ratios that investors typically use. Price to earnings, PE ratio, measures how much investors are willing to pay for each dollar of a company's earnings, calculated as market price per share, earnings per share, EPS. A higher PE may indicate expectations of high growth, a lower PE may indicate undervaluation or risk concerns. Earnings per share, EPS, indicates a company's profitability on a per share basis, calculated as net income, number of outstanding shares. Return on equity, RO, shows how effectively a company uses shareholders' funds to generate profit, calculated as net income or shareholders' equity. Higher ROE typically signals a profitable and efficient company. Debt to equity, DE ratio, measures the degree to which a company is financing its operations through debt versus wholly owned funds, calculated as total liabilities, shareholders' equity. High ratio can indicate higher financial risk. Current ratio indicates a company's ability to cover short-term liabilities with short-term assets, calculated as current assets, current liabilities. A ratio above 1 is generally considered healthy. Quick ratio, acid test ratio, measures ability to meet short-term obligations without relying on inventory sales. Calculated as current assets, inventory by current liabilities. Price to book, PB ratio, compares market value to book value of equity, calculated as market price per share and book value per share, useful especially for asset-heavy industries. Price earnings to growth, PEG ratio. Adjust the PE ratio by annual EPS growth expectations to assess valuation relative to growth. Price to sales, PS ratio, compares a company's stock price to its revenues, useful for companies not yet profitable. Profit margin shows the proportion of revenue that turns into profit, calculated as net income revenue. Dividend payout ratio shows the percentage of earnings paid out as dividends. Important for income-focused investors. These ratios are best used in combination rather than individually, providing a rounded picture of liquidity, profitability, leverage, and valuation for investment decisions. They also require comparison across industry peers and historical data to understand context and benchmarks. Finally, it is requested to kindly subscribe our channel as it keeps us motivated to make valuable content for you in the future. Thanks in advance.